Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 2nd of July. All right, now the weekend major events. Well, we've seen a few things roll over. Obviously, the G20 has come and gone. We've got to back to sort of obviously normal liquidity and the ramifications of the G20, the China-US trade issue, which is still an ongoing issue, and Brexit. Put all those events together, and what we've seen is the dollar bounce. Now, this US dollar bounce is a key part to really breaking any sort of consistency or momentum across the board. Now, the safe haven trade appears to be, with dollar yen, seems to be off the table. It's sort of broken higher on the hourly and dailies. The overall central bank sentiment coming from predominantly the Fed is still down. The US dollar direction, we had the daily, the dollar index, the daily trend lines broken down. Now it's broken back up into the range, which has put it back into a sideways moving market. And it's also all those pairs that were sort of cruising up topside, sterling, well, Euro, Aussie, and Kiwi. The odd one out. It's still holding onto its gains. The other pairs have lost all momentum. Right, they've drifted all back into the range, and if anything, there was a nice sort of uptrend line on the Aussie on the hourlies. That's now broken through and has pointed down. Now, that may be more to do with the upcoming RBA interest rate decision today, which you have to understand. This is a fully factored in interest rate cut. So when they do cut rates, it's expected. All right, this is the key sort of part to understand the market. So if they do cut and the currency will still probably come off a little bit, but it's going to come down to the statement. The statement will be the driver here of the Aussie direction. So if they come out and say, yep, there's another one and there's another one coming, well, Aussie will come off further. If they basically cut rates and say, well, that's it for now, we'll have to wait and see later in the year, you probably see the Aussie bounce, right? So understanding where the direction is and what's going on is the hard part here. And so if they don't cut rates, the overall major risk here is if the RBA do not cut rates. I think they will for sure, but there's always that outside chance that they don't. If they don't, well, the Aussie will bounce, you would think, pretty aggressively. All right, so that's going to be the probably major focus for the markets, especially in the Asian session. Now, as we come through the other sessions, we've got some pretty good peripheral data here. Now, German retail sales figures, usually pretty consistent, but check out the last number here was -2%. They're expecting a bounce here. So if we don't get a bounce in the German retail sales, that's a pretty big negative for the Eurozone, predominantly since Germany holds the whole place up. So keep an eye on that. It could be a good lead into an opportunity there for a bit of momentum on Euro. Sterling, well, nationwide house prices, I would look at this if Brexit wasn't in play, but I'm not going to be focusing too heavily on that. The construction PMI, another good, solid number. But once again, Brexit clouding the fundamentals and the US dollar direction, it's pretty hard to sort of see the UK fundamentals really coming into play at this point. Once again, the Eurozone producer prices, another bit of a bo peep into the back end of that Eurozone economy. And then coming down to the North American session, dollar CAD, it has drifted back into the range. Okay, on the hourly, still daily and weeklies, it's broken down. We have the some manufacturing numbers there as well, PMI numbers. You probably want to have a look at that. That's going to come into play. So basically what we've got is we've got a really high impacting event with the Aussie RBA, and that's sort of noted on the MyFX Trading Hub. You'll see the event. 5 hours later, we do have the RBA governor speaking. Now, with an interest rate cut, as I said, the risk is they don't cut and the thing shoots higher. What you do find is when the head of the central bank, I should say, speaks after the event, and in a good 5 hours, he may give greater clarity to what the whole statement was. So just keep an eye on the RBA governor speaking. This is probably going to be a key potential release throughout the day, and most traders will miss it because I think the key one is the release itself. That's part of it, but just be wary of what the governor is going to say. And this is pretty much the last really high impacting data release until Friday, right? So you've got a lot of room to move here. So coming back over to the just the charts. Well, actually, I'll just give you a quick look at the news that's floating around the place. Obviously Trump is a major headline, which he absolutely adores himself on the papers. So he's just basically saying, yeah, look, things still have to be in our favour, not China's. Hong Kong still kicking off. That's more of a distraction than anything else. I can't see too much out of that. And the other thing is, which I think is going to be a building story, is now that Trump seems to have, well, he's coming back to the table with China. He's starting to throw around some more tariffs on other regions like the EU, right? Aircraft subsidies. He's going to whack $4 billion in tariffs on those, apparently. So that's something to have a look at as we go forward, or plan India trading. Now, the major currency pairs. Now, let's just have a look here. As you can see, this is that nice breakdown through 69.90 in the Aussie. Sets up, well, it's sort of drifting back into the recent range. But you know what? This thing fundamentally is looking probably starting to look like the worst economy out there. So I think the RBA, they know they've got their work cut out to try and hold this thing up. And they haven't got far to go before they hit zero interest rates. And that's where things are going to get really messy in Australia. So I can see that going lower. And as you can see, Kiwi here, okay, has got a number of support lines here. And that's probably one of the reasons why it hasn't broken down yet. Now, it's not looking as weird and bad as the Aussie economy. Now, dollar yen held onto those gains. You can see that sort of gap on Monday, started trading sideways. It hasn't really even come back down and closed out. So I think there's still a chance for a bit more of a short squeeze at the top side. And euro finally, after trading sideways, and sterling starting to drift lower. I think, once again, euro, Aussie in particular, the two pairs that are really weak, weaker than the rest. All we've been waiting for is this US dollar to turn. And it hasn't really gone up yet, but it is rallying and it's starting to turn these things down. So just be aware, it's just harder because all the central banks have gone negative, including the Fed. That's why it's a little bit harder to recognize what's going on. Now, oil back at $58. Dollar CAD, this down move is now, to me, pretty much defused. It's now trading sideways through that. You've got to think the market's still sitting short, right? Short on the dailies, short on the weeklies. There's room for a pretty decent rally here. So if we do get weak manufacturing numbers out of Canada later today, or even more strong geopolitical noise out of Trump, well, then we might see dollar CAD bounce. But the key to this bounce in dollar CAD is definitely going to be oil. If oil falls back to, say, $56, well, then we're going to see dollar CAD above 132. It's a good time to start looking at CAD yen, in my opinion. All right, so there we are, guys. As I said, the major focus here is the Aussie and Aussie crosses. Have a look at the general pairs that have got strength and weakness compared to each other. That's where the best trade's going to be. And you know what? It's not a hell of a great opportunity. The interest rate cut, once again, is factored in. The statement, which can be a bit convoluted, is going to be the tricky part. And look at the structure here of the Aussie. Technically, it hasn't got a lot going for it. Okay, yeah, short term it's going down, but the rest of the charts is trading sideways. The RBA is down, but so is the Fed, and that makes that pretty much sideways as well. So what we can do is get fresh, clear sentiment out of the RBA. If they are clear in their statement that things are absolutely crap, well, Aussie will go down further. If they are neutral after this, well, you know what? We might see a little dip, knee-jerk reaction down on the cut, and then we might see the Aussie rally from there. But it's going to be interesting to see how that plays out. And that's pretty much all there is for today, guys. There's don't push the markets where they don't want to be pushed. Wait for the moves to come and then jump on them. All right, guys, have a good trade day. Cheerio.